Greetings, members, one and all of the Salivation Nation, with some news that the LBMA will get an exemption from a crucial Basel III rule. Let's explore! That's right, the London Bullion Market Association has been lobbying for this, and you've heard me talk about it on other videos, and we've read about it, about how many of these big banks, well, they would like to have some exemptions and a little bit of some breaks from these tighter capital rules that Basel III has been implementing and put in place, and they've actually had these deadlines that have been met now for two of the three tiers that have come into place. One was for the European banks, and that happened the 1st on the 28th of June. Then on July 1st for the U.S. banks, and then in January, the London Bullion Market Association and all of those banks that trade with them, they will need to comply for these capital rules. But already, we're far away from January 2022, and already it's all but confirmed from Reuters here. We're reporting here that a British regulator said that the banks clearing gold trades in London could apply for an exemption from tighter capital rules that are due in January the 1st of 2022, removing what some said was a threat to the functioning of the market. London is the world's biggest precious metal trading hub. Its clearing system, operated by a handful of large banks with access to metals and vaults, settles gold transactions worth around $30 billion a day. The upcoming rules, which are known as the Net Stable Funding Ratio, the NSFR, are a part of the Basel III regulation designed to make banks more stable and prevent a repeat of the financial crisis of 2008 and 2009. They treat physically traded gold like any other commodity, requiring banks to hold more cash to match their gold exposure as a buffer against adverse price moves. That seems only logical that they would do that, and especially after what happened in 2008 to 2009. For those of you who don't know, the Basel III rules were written by the central bank to the central bankers, otherwise known as the Bank of International Settlements. And the London Bullion Market Association, which is the industry body, has lobbied against them, saying they are unnecessary and could force some banks, including clearing banks, to stop trading. Although I kind of doubt that's going to happen. They're always going to want to trade gold, and good grief, if every other commodity is tied to those rules, gold is going to continue to be traded. In fact, I would say that their argument, at least according to this Reuters piece, saying that it's unnecessary, pretty much means that it probably is necessary. Following a consultation, the Bank of England's Prudential Regulatory Authority, the PRA, said on Friday it had decided to amend its approach to precious metal holdings related to deposit taking and clearing activities. It said it had introduced an independent precious metals permission, which would reduce the size of the required capital buffer. Some say it was like 85% or whatever the value, and they may lower that, would reduce it. Who knows, maybe it's 75 or 65, but in April of 2019, gold was marked as a Tier 1 asset, or recognized as such by the Bank of International Settlements, putting it equal to or on par to cash, which in this day and age, given what many central banks are doing with their currencies, that's not saying a whole lot with quantitative easing and the like out there. This is one of the key points that what we've been asking for all of these years, said Shakila Mirza, the LBMA's chief counsel. Clearing will be exempt. So he's definitely celebrating this. The PRA said it would not classify gold as a highly liquid asset which would have freed other trades, such as precious metal loans and leases, from the high capital requirement. Well, I don't know about you, but if I'm going to borrow against gold, I want to make sure the gold is there, or what have you. I don't know. It seems like they're fighting something that, they don't want to give up what control and what room they have to move now. They want more headroom with this, so they can do it. Like I said, all these people trading all these stocks, bonds, shorts, futures, and the like, it becomes convoluted. This is why I like the physical. It's simple. You've got it. It's there. And I think if you're going to have a precious metal loan against it, you want to make sure you have the physical to back it up. The LBMA says gold is liquid enough not to need additional liquidity buffer for clearing and settlement in short-term transactions. Well, that's true. It's so liquid, in fact, that it just leaks right out of the vaults. If there's not enough of the metal to back, especially, but look at all of the derivatives that are surround gold, and especially silver. I think that is something that means there needs to be some tightening of these regulations with some of these central banks and some of these big banks. Now, here's something that I've mentioned in prior videos that seems to be a running common theme here as we end out this article. I think it's quite fascinating, a little bit humorous here too. We have a list of the London clearing banks. They're JP Morgan, HSBC, ICBC, Standard, and UBS. JP Morgan declined to comment, and the others did not immediately respond late on Friday. So JP Morgan has a running theme of declining to comment on anything, mostly because they've been caught red-handed manipulating and spoofing precious metals, where they had to pay $920 million for doing such activity. But I think when you have so much derivatives, there's a much more likelihood, a chance for corruption and mismanagement of those funds, which is why I think that, at least on the surface, these Basel III rules seem to make sense, and especially recognizing gold as money, because you think about it, gold as cash, on par equal to cash, is a tier 1 asset, and understanding that central banks are adding more gold. I posted a video about that recently too. I think in many ways anticipating these changes. But of course, if the LBMA is going to get this exemption, what about the European banks? What about the American banks? Now, obviously, JP Morgan is an American bank, and they work closely with the LBMA, so it may not matter. But nonetheless, other exchanges and the like, I guess, are handled differently. We may have arbitrage in our hands, especially between the East and the West in terms of precious metals. Sooner or later, I think that's where you're going to see a further widening of the gap with how metals are traded in the East versus the West, because we know that as a part of the culture of the East in general, they value the metal culturally, the physical metal. They hold it in their hand, they can see it, they utilize it for weddings and for wealth preservation and for emergencies. That's what it's about. The substance of gold being a solid unit that has withstood the test of time and has survived different epochs, generations, cultures, everywhere around the world. And so you can make this a derivative and have it far removed with different paper assets, electronic assets, transactions, and the like for only so long. Sooner or later, that's going to come back to bite you. So, I think it's quite interesting. And I know there's probably particulars of the Basel rules that we're not privy to. I'm sure it's incredibly complex, as I mentioned also in a prior video. A lot of these movements, a lot of the Basel III rules have been phased in for quite some time. There's already talk about a Basel IV. And what happened with Basel II and Basel I, some of the other rules that they've done, it's not uncommon to see some of these regulations adapt and change based off of prior financial crises. So we'll see how it all plays out in the end. But nonetheless, there it is, as predicted. This is what's happening here. Thomson Reuters is reporting on it here that JP Morgan or the London bank, the London LBMA, will get their exemption from Basel III rules coming in January. Little heads up. What does this mean for you and me? Well, everything remains the same. The fundamentals of gold are intact no matter what any organization says or does. We know holding gold is a way to protect our wealth over the course of a long period of time, and we will continue to do so. It doesn't change our calculus in one iota. And I think that is a beautiful thing. No matter what they do, we will continue to do what we do, and that is to stack the physical metal. And I believe that no matter what your involvement is in the marketplace, I condemn no one for investing in any stock, any derivative, any exchange-traded fund, but I believe those who do so would be wise, and it'd be incumbent upon them to stack also the physical metal as well. And not only because you know what you're holding in your hand is yours, you hold it, you own it, but the beauty of it is unmatched, unparalleled. Gold. It is a beautiful metal, and it is a metal to behold, and it is a metal to hold. So there you go. Let me know what your thoughts are in the comment section below about this news for the day. And I would like to extend a multitude of golditude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.